process costing. And as part of that, we also would be discussing about joint products and byproducts, how to account for costing of these, which happens when the production is in various steps. As I said earlier, process costing is a costing method which is used when for a manufacturing concern, production happens in different stages. When the production is, product is manufactured in different process. In that case, we go with the using of this process costing method. Now, the following points which we have to remember when we hear the word process costing. First is, as we learned earlier, it is a method of costing. And the second thing what we have to remember is, it is method of costing that is used for ascertaining the cost of a product at each stage of production. Very important, cost of a product at each stage of production, because in this case, we said that there are different stages for a product in its production process. So if we really have to bring some control, some efficiency in the mode of operandi or in the operational process, we really have to understand what is the cost associated with each of these stages. How much is the cost incurred for, say, let's say, for process 1, process 2, process 3, and so on, until we go to the finished product stage. So in that case, it will be easy for us to bring a control on each of these stages. That is why we say that it is used to ascertain the cost of a product at each stage of production. Finally, we know that when we total up all these, it will give us the cost of production of the finished product. Right. So that's why it helps us to ascertain the cost of each of these stages. And then what we have to understand here is, in this type of costing, normally production is continuous. It's not just one end process. There would be different stages, as I said. And in most of the cases, the product would be of uniform nature. Say, for example, we have near to Kalamashiri, we have a unit of Milma production unit. When we go to that fact, I think some of you have already visited there. When you go to that place, we can see that the products are uniform in nature. Maybe they will go with 10 or 1,000 or 20,000 packets depending on the demand for each day. But it happens in stages. Initially, the milk is being collected, it's cleaned, then it is processed, then it is packed. But there is some uniform product being produced. The production happens in stages. That's a very good example of where process costing method is used. So if they want to bring some control in the quality factor, if they want to bring some control maybe at the stage when it is being processed, if they find that the milk is not it is not keeping right till if earlier they had some problem with the milk getting spoiled because of some problem in the production process. So if they want to bring some control in that, they should know where is the actual problem, where is the correction needed, in which stage we need the correction. So all that can be taken care in such industries when the production is happening in different stages, right? So in such type of industries, we go with the method of costing called as process costing. Now, the next thing which we have to understand is the production of a particular product may give rise to a joint product or a byproduct. Say in the same industry where we can see, which I was referring to is milk production. There we can see that it can, part of it may go for production of cheese, butter, and they also go with manufacturing ice creams. So it will happen as joint products and byproducts. Right. So this is also another nature of this particular industry, that is process. Those industries which we are going with process costing method, there can be the occurrence of joint product or byproduct. Now, another thing which we want to remember is there will be certain avoidable and unavoidable losses. See, avoidable losses is by taking due care. We can avoid the loss of the quality of product if we keep it in the right way, if we use the right process, we can keep the quality of the product, which will help us to avoid unnecessary loss of the raw material, all these things. But there are certain unavoidable loss, maybe loss due to, say, when we are talking about a chemical industry, there can be certain losses which are unavoidable because of evaporation. Some chemicals, when it is opened, there would be some small portion which would be evaporated. That's a loss. Even if we exercise the optimal control, there can be some loss due to evaporation or pilferage, all that. So that is actually part of the business, but that also needs to be accounted for. So there can be some avoidable and unavoidable loss which is connected with the process costing, which will be recorded in the process accounts. Later, when we are discussing about process accounts, we will talk about this. Then another thing is cost of any unit of production. In this cost of any unit of production under this method is the average cost of manufacturing for our period. Average cost, because it happens in process 1, process 2, process 3, maybe in some certain cases there can be 5 to 6 process, 5 to 6 stages. So the average of these, and still the production may not be finished, so still you will not have your finished product in your hand. So if you want to calculate the cost for a particular period, it will be as such that we will look into the average cost of all these different stages. That's how we go with computation of cost per unit of production in the case of process costing. And I put few examples which is very easy for you to understand. Maybe milk production. I said the case of the example of Milma, which is very near to us. There is also another factory where they go with the process costing method, which is Modern Bread. Some of you have already visited that factory for looking into. So that's also where we can see the production happens in process. And I think some of you also have visited tea factories where we can see that production happens in different stages, different processes there. Finally, when we arrive at tea dust being packed into different weights, maybe half kg or 1 kg or 2 kg. Before that, there are different processes. So all these industries can be brought under the category of those industries which are using process costing method. Okay, so I just summarize these points once again. It is a method of costing, and it is used to ascertain the cost of a product when the production happens in different stages. And here what we have to remember is production is a continuous process, and in most of the cases, units product produced would be unique, or there would be uniformity in the products or in the output. And there can be chances of byproduct and joint product as a result of this process, which is also brought into account when we are going with the process costing method. And there are two types of loss, but that is part and parcel of every business, avoidable and unavoidable loss. And that's where we say about or maintaining operational efficiency, bringing control, application of standard costing techniques. All that is being done in order to ensure that the avoidable losses are minimized to the lowest, and of course we are taking care of the unavoidable losses. So that is also part of this type of method also. And as I said, the average cost is the basic assumption for computation of cost per unit in this also. Normally, when we talk about 2 or 3 stages of production, we take the average. The same concept is used here also. We take the average of each of these processes, even if we have not reached to the final stage for computation of the cost per unit. Okay, these are the basic things which you have to remember when we are talking about process costing method. So in one sentence, if you ask me what is process costing method, it is a costing method which is used when the production happens in different stages. That's a simple answer to such a question. So this is the context where we are discussing about process costing. Now the next thing what we have to remember is elements of process costing when we are talking about recording of cost. There is no difference. We have learned the basic elements to be direct material, direct labor, and direct expenses. Of course, there is another part which is indirect expenses, which together we call as overhead. These are the elements that is applicable to process costing also. But what we have to remember is, see, in direct, since the production happens in process or different stages, there is little difference in how it is accounted for when we are talking about process costing. That's why we discuss the elements in this context. The first one is when we are talking about direct materials. Generally, in a factory setup, material cost is accounted to the first process. Generally, okay, there can be differences, there can be exemptions, but majority of the material expenses will be accounted during the stage 1. That is the process account 1. Why? Because we estimate the requirement of material during the stage 1, during the process 1. Because suppose if I want 100 units of finished products, I'll tell the example of, say, if I want to have 1,000 packets of milk, Milma, 1,000 packets of milk, I will know how much is the quantity in liters. How much is it I need at the beginning of my process? What is the quantity of milk I require if I expect an end product of 1,000 packets of milk? Right. That is the logic with which we say that material cost normally will be accounted at the at the stage 1, that is process cost account 1. We account whole of the material. But I said there are exemptions because in certain cases we do not require some materials at the beginning stage. We will need that only towards the end of the process, only towards the final stage. In such cases, we will account for those material expenses as per their requirement, as and when it is required. So it might be accounted in process account 2, or it might be accounted in process account 5, depending on that particular condition. But what we have to remember is majority of the material expenses will be accounted at process 1. Okay, so that is with respect to material. But that is slightly different with respect to labor. When we are talking about labor, of course, we know that what is the labor expense that can be associated with process 1? What is it required for process 2? How much is it required for process 3? Likewise, we know exactly how many number of men need to be at work, or how many people will be, say, maybe some of the stages are mechanized. That does not need much of human intervention. It is fully mechanized. See, in Milma, if we go, we can see that some of the processes are really mechanized. They just want one man standing there and looking at whether the machine is functioning. So the labor expenses in those processes will be very less. Right. So accordingly, here what we have to remember is labor expenses will be directly allocated based on the requirement of each process. Right. Now, the third is direct expenses. It is specifically identified for each process. It's not a blind hit. It is specifically identified based on the requirement of each process. Say, for example, electricity charges. If the process is mechanized, we know how much is the electricity expenses normally which will incur for a particular process. Right. So that will be that particular expense. How much or how many units of electricity being used, being consumed will be allocated to that particular process. So that's why we say that it is based on that specific process. And the next one is indirect expenses. And indirect expenses, the problem here is we may not be directly, or it may not be directly identified with a particular process. It will be very difficult for us to identify that and allocate completely to a particular process. So there is a word which is used, reasonable allocation. I put that in quotes, reasonable allocation based on some reasonable justification. Indirect expenses, if we are not in a position to identify it with a particular process, then what happens here is a reasonable allocation which is based on some justification. That's how we account for elements of cost in process costing. Elements of cost in process costing. Again, here if it is asked for theory, we can say that elements of cost in process costing can be categorized as basic direct materials, direct labor, direct expenses, and of course overhead, which is otherwise called as indirect expenses. Now you might be asked about how the allocation or apportionment is being done with respect to process costing. That is where I have explained that it depends on that particular process. Okay. Now the next part which we would be discussing here is we are talking about process account. Till now, I had been referring to process account. It is nothing but it is the stage where we are accounting for different costs associated with each process. Okay, so if there are five steps of production process, 5 stages of production for a product, in that case, there will be 5 process accounts. Generally, there would be 5 process accounts. Suppose if it is a very minor stages, one or two is very minor, maybe clubbing happens. But if it is specifically identifiable, then if there are 5 stages, you will have 5 process accounts. If you have 2 stages, you will have 2 process accounts. Process account 1, process account 2. And finally, you go with the cost of finished product. So that's why we say that in this case, we will have separate accounts kept for each process. And another thing which we have to remember is the value of materials, labor, and other expenses would be debited in the process. The principle of accounting remains same here. The expense will be debited in the process account. And of course, if there is some category of normal loss or abnormal loss, that will be credited with our process account. And the balance representing maybe partly finished products or finished product again will have a place in the credit side of our process account. The same principle as we go for accounting. That is, we will be debiting all our expenses, and if at all we have an additional value, benefit which is being derived, that will have a place on the credit side of our process account. Again, I repeat, see, process account, suppose if there are 5 stages, 5 processes in the production of a particular product, definitely in the normal case, we will have 5 process account, which is maintained separately for recording of cost associated with each process. Say process 1, process 2, process 3, process 4, and process 5. And the basic purpose is, if at all, if I have to bring a control in the cost factor, I should know where is it being accounted for, where is it being accumulated, where is the correction I need. That is the basic reason why we have different process accounts. Of course, there are exemptions to that. When we have minor activities being clubbed together, that is just for the purpose of convenience in operation. That's all. We need to ensure that things are easy at the production stage. That's why we do in that way. But generally, each process will be put in different accounts so that better control can be brought about. Now, the last part which today we are going to discuss is the proforma. It's an example, okay, of 2 stages. For a production process which involves 2 stages, which is complete in 2 stages. Okay, this is a proforma for that. You can see that it's very easy. Just listen to me very carefully. All the expenses being put on the left side, on the debit side, which is direct material, direct labor, direct expense, factory overhead. And of course, if you have any loss or the balance to be transferred to be, it's a balancing figure. It's actually the balancing figure which is put on the credit side, and it is taken to the next, which is process 2. Process 2 will start with, as we do when we prepare trading and profit and loss account. The balance being brought in, okay, from the previous process, and the final can be either it is transferred to process 3. If there is a stage so-called or not, it would be finished product. That will be the balancing after accounting for all the expenses associated with that. It can be gain, it can be loss, but after that, the balancing figure will be taken to either process 3 if you have a stage, if not, that will be the finished stock. That's all. This is actually the framework of process cost accounting, okay, or process costing. See, I just repeat it once more. Process costing is a method of costing which is used in companies where production happens in stages, or in a way it happens as different process. So each process can be brought under a separate category to bring better controlling, to maintain operational efficiency. That's a basic idea behind process costing. And the basic difference, if I take no specific order costing and process costing, this is the basic difference. Say, for example, job costing. Here, the cost is associated with a particular task which is complete in a production. But when the production happens in process, we say that we cannot compute the total cost by just looking into one stage. We need to have the average cost incurred in each of these processes to arrive at cost per unit. That's why we go with the process cost.